All right, what's up, everybody? For everyone that doesn't know me here, my name is Jonathan. I'm a small cap trader. I got into the markets in 2020 and 2021. I always thought it was cool to document nothing into something. So in 2020 and 2021, I was documenting my trades. If you go back into my older videos, you guys can see that. I recently got back into the markets at the end of October. So coming back again, I'm getting acclimated to the market, journaling my trades, etc., etc. So as you can see from this video, I'm going to be going over my January results. Alright, if you guys are still watching, I really do appreciate it. Alright, so on the month, I was up $33.72. My average profit was 19 bucks. Average loss was just under 8. My biggest profit was just under 43, and my biggest loss was just under 19. Average percent gain is 18. Average percent loss is just under 8. Biggest percent gain is 50%, and then my biggest percent loss is just under 15%. My win rate overall is 31%. So how I feel about my results is I think that these are pretty good. After this green week, I did end up sizing up a bit. Now, just to be full transparent here, I'm trading with a $300 account. The reason why it's so small is because paying off debt, have a wedding to save for, trying to pay off my car, which I'm really close to. So once I, pay off some more debt and I pay off my car, I'm gonna start flooding my account with some more money. So I'm not really too worried about the wins and losses. However, yes, I kind of am. If you saw my other video about how why trading with a small account sucks, but however, I think that I am ready to start putting more money into my account, and the reason for that is because I feel I'm more inclined to take a 7, 10, 12, 15, 20% gain if it's above $15 rather than if it's under like $7 or $10. Now I know that's not like an astronomical amount of money, obviously, compared to what you see on the internet. But I do believe that that's something that I could slowly compound into, because then from there, it could be 25, 30, 40, 50 bucks. And, I mean, 50 bucks a day, that could really help, right? So here's my, trading stats. So I'm going to be going over this, just a quick review, and then also intertwine it with some charts. So my biggest win was FEED. That just happened, I believe it was yesterday. And then my biggest loss was BATL, just under 19. That was earlier this week as well. And then, as you guys can see here, my biggest day, and then my biggest loss. They were so close together because I went into a trade with BATL and I wasn't mindful enough that I was entering a stock that was up 300% on the day from pre-market. And then I entered near pre-market resistance. I hit resistance, and it just got rejected, so I ended up selling. And then I dip bought it, and the stock was already red on the day. So the first loss was $16.20, and then the second loss was $11.50. However, if you guys go to my trades here, it is the big. These are the only two trades that I had that were quote unquote big, back to back. Everything else, it's not. It's not. I don't have two big losing trades back to back. So my strengths, from what I've realized, it's cutting losses, journaling and tracking my trades, keeping winners bigger than my losses. I'm able to adapt fast, and then also recognizing action and potential squeezes, which is what really helped me on the second week of January. Well, technically the third week, whatever, this week right here. A lot of shorts were getting squeezed, and I got some really good entries, and I was just able to really nail my entries this week and really capitalize on those squeezes. Areas where I need to improve is not having a defined risk with my morning spikes. So I usually trade my morning spikes on my phone since I'm at the gym. I'm in California, so the market opens at 6:30, and so by that time I'm already at the gym. And so for me, I mean, yeah, my morning spikes risk can be low of day. However, I think it's a little bit more nuanced than that. Because I mean, for a morning spike, I just want to get in and get out really quick, make my money, and that's it, and go to the gym. I don't want to really be managing a trade while I'm at the gym. So The second area where I need to improve is not always using my buying power for the best setups. Since I don't have a lot of buying power, I really need to be focused on that I'm using my buying power for the best setups. Re-entering a stock after I make money on it, that's one of my rules, and that's actually what helped me be green this week, is, not entering a stock after I make money on it. Like 9.5 times out of 10, after I re-enter a stock after I make money on it, I lose. So that goes hand in hand with dip buying right after a squeeze. So it'll squeeze and then it'll dip, and I'm like, well, I want more because I'm greedy and I'm human. But like I said, 9.5 times out of 10, I end up losing money on it. There were a couple instances where I wasn't mindful that there was a catalyst that there was a catalyst pushing a stock. Initially, I thought that it was maybe just a pump and dump, and the company was just pumping it so they can end up dropping dilution news later. But because I wasn't mindful of a catalyst, any kind of red candle, I would get very jumpy and I would panic sell. And so because of that, I end up missing the move because I think it's a pump and dump and they drop catalyst news, but really it's just a small pullback, and the stock is moving because of a positive catalyst. And so if I would have known, if I keep this in mind, obviously, I'll be more inclined to hold this position because I think of it of a pullback rather than, okay, well, this is where it's gonna start dumping on us. The next one is not putting a stop loss where it should be because of too much money loss. I know that this is a sizing issue and or a positioning issue. There's been times where I end up not putting my stop loss where it needs to be because I don't want to lose that much amount of money. And like I said, it says right there, like I said, it's a sizing issue. Also, maybe I need to get into the position earlier. Either that or just be okay with losing that amount of money. And so I end up putting a stop loss where it doesn't need to be, and then I end up getting stopped out, but then the stock ends up bouncing off of that position where I knew I should have put my stop loss, and it ends up running to my favor. So that's something that I need to improve on as well. I realized that I need to have a max daily loss, maybe 15 to 20 bucks. If I hit that in one trade, then I'll just be one and done. But I will see on this one, because I'm good with cutting losses, and I'm trading with the small account, so there's so much buying power that I have. But yeah, so not sticking to risk outcome. A good example of this is gonna be once it happened on January 6th with SIDU, and so I'm pulling that chart up right now, and so as you guys can see, right here. I'm going to make this a little bit bigger for you guys. Hopefully you guys can see this. So my risk was 460. I didn't stick to it because that red candle that you guys see right here, that's when I was like, okay, well, this is going to be it, and it's just going to dump, and that's it. I was anticipating for this to dump before it even hit my risk. And so it bounced right off 460, and it ended up working out very well. Now with me, I don't put my stop losses at whole numbers. I don't put it at 460. My stop loss here probably would have been 455. And the reason for that is because, as you could see, it bounced off right at 460. So my stop loss would have gotten executed if it was at 460, and then it ends up running. So that's why I always put my stop losses at like a 455, 454. I just give myself that room for slippage. Another example was ZNTL 17. That was actually the next day. I was very pissed because I remember just being super upset with myself because, at this point I'm just sabotaging myself. And so, I saw that big red candle and I was like, okay, this is it. I believe my risk probably should have been 2. Probably just right under 2, 195, 190. And I ended up selling because I didn't stick to my risk, and yeah, this trade ended up working out very well. The next example is going to be EVTV 112, and the reason why I put on my strengths is that I'm able to adapt very quickly, is because when this kept happening to me, I'm like, okay, something needs to change, and I need to stick to my word on, if this is my risk, this is my risk. And this one right here was like my turning point. My risk right here probably not 140. It was probably like around 130. And I saw this big red candle, and I'm like, okay, that's it. Let me go ahead and cut. And yeah, this thing just freaking took off right afterwards. So yeah, very very painful. This one was the one where I'm like, yeah, you need to change something because you're missing moves and you're leaving money on the table. And so if you guys are still watching this, stick to your risk. Okay, stick to your risk. Um, for not choosing the obvious risk because of money and sizing issues. A good example of that one is going to be SPHL on the 15th. And so with this one's kind of, I mean, I'm giving myself a little bit of leeway because I knew when I answered this that my risk, I knew my risk should have been right here, which is, what is that? Uh, let's just call it like 12:30. Okay. I knew my risk should have been 12:30. However, um, when this went in, I believe my risk was right here, and then I ended up moving my risk as it went up to 14, and so this was a dumbass fucking trade. This is a great example of that. You can't control the market, but you can control your trading plan. This is why I'm like kind of about it. And so what ended up happening was everything was working out very well. Okay, a spike came back down, consolidated, and then it started working. And this big red candle, it ended up spiking up, and I'm like, okay, this is where the squeeze is gonna start happening. But it spiked up to 20, and it immediately dropped, and it went into a halt. And then after that halt, I know I was in a halt down, and after it reopened, I ended up getting stopped out, and then this thing freaking recovered, and it ended up hitting my profit target, which was 24. So, I mean, shit happens, you know. I guess a better one for that is feed, and that was actually today. This was a great example of what I was talking about having, early morning spike and not having a risk. No, this was feed. This is 1:30. This was yesterday. I'm gonna need to redo that, but let me go ahead and show you guys here. So it's this one. So I was ended up playing the morning spike. I just had an inclination based off price action that this had a little bit of more squeeze to it, so I traded it today. And ideally, my risk should have been 4. I didn't have it at 4. I didn't go through the whole motions of seeing what I'm gonna have, how much money I'm gonna lose, etc., etc. So I ended up taking two. I ended up taking 2 more unnecessary trades. And yeah, if I would have stuck to the risk of 4 that I knew that I should have stuck to, then this would have been like a nice $44 trade for me. But since that didn't happen, I ended up being right on the day. So those are some good examples of not choosing the obvious risk because of money and then also, sizing issues. The next one is going to be selling earlier because I wasn't aware of a catalyst. I know that there's 2 in here. I couldn't find the other one, but I'm going to go over CRVS. And so CRVS, man, I left a lot on the table with this one. Because initially I thought that this was going to be I thought that this was like a pump and dump or something. And like I said earlier, that the company was just pumping it so they could end up dropping dilution news. And I saw this big red candle, and I'm like, okay, well, here it is. Here's dilution news, or here's the news, and it's just gonna die. And so I ended up panic selling, and this ended up going for much higher, and I ended up leaving a lot on the table. I was very upset with myself with this one as well, so that's why I need to be aware on whether a stock has catalyst or not. Tickers to go over. I want to go over ZNTL with you guys. ZNTL was really, really cool to see. And the reason why I want to go over this with you guys is because I saw this earlier. I saw this at its initial run. I believe it was like at 130. And I guess the point of me going over this one with you guys is just to see, just so you guys can see this dumbass run, I guess you could say. So I ended up seeing this like on its first green day, like at 135, but it wasn't trading with the volume that I usually trade with. So I just kind of ignored it, and then I was just not necessarily chasing this, but I was trying to get some action within these next 3 days. Next ticker I want to go over is BNAI. BNAI was been such a headache for me. Not necessarily a headache, but seeing this in the after hours on its initial run the other day, it was really cool to see. It was just the price action was insane. So it ended up running in the after hours on this day right here. I believe it was like Monday or something. Yeah, this thing opened up at 17 and it closed. Oh no, sorry. This thing ended up opening up at like 1069, and then in the after hours it went to 68. Now compared to what we've been seeing earlier this week with the shorts getting blown up, this is nothing. But to see this live, this was awesome. And so if you guys go back through my trading review, on this day right here, I ended up trading this. I was expecting it to squeeze more, but it didn't happen until this day. And then same thing here. I was expecting this to squeeze more, but right here. I'm so sorry, you guys. I was expecting this to squeeze more in the afternoon, but it didn't happen. And then on this day right here, I was a lazy fuck and I didn't wake up for pre-market, and I ended up missing the squeeze. And so I kind of got emotional, and I ended up re-entering, wanting it to squeeze more again. I was hoping we could get to 100, but that didn't end up happening. And this is very similar with what happened to me today with feed. So with feed, it was kind of a similar thing. I was able to learn from my mistakes, right? And so I traded this yesterday, and so caught a nice 50%, and then I got caught around in the chop, and I was expecting this to squeeze more. However, it didn't, but it did today in the pre-market and then also market open. So I ended up missing this move because, like I was saying earlier, just not having a set risk and sticking to it, and so yeah, I ended up missing this move. These entries and exits, I was just trading with small size. It doesn't really matter. I missed the move is the point that I'm trying to make. And then I guess I was supposed to go over SPHL. If you guys are still watching, I really appreciate it. Go ahead and subscribe, comment, like. I'm trying to be transparent with you guys as much as possible. So SPHL 115. This one this one I already went over with you guys. That's not where I ended up missing because big green candle and then hard smack down, halt down, etc. So I already went over that with you guys. So here it is. Like I said, positive $33.72, 31% win rate. This is my trading recap, guys. Don't really know what else to go over. So thank you guys so much for watching. Have a good one.